Hey, welcome back to the program. It's Hot Topics. Real quick, want to check in on November retail sales. Retail and food service sales for November were up 0.7% from October, up 3.8% from November 2023. And this spooked markets a little bit. Remember, we have the Fed meeting starting today, decision tomorrow on interest rates. This number was better than expected, better than the prior month. It's debt-driven, but still a sign of demand out there for sure. Now, this is nominal retail sales, not adjusted for inflation. So if we were to adjust for inflation, not as robust, but on a headline number, this spooked markets. Stock sold off, bonds sold off, dollar rallied, oil sold off, commodities sold off. On speculation, the Fed doesn't cut rates tomorrow, and therefore growth isn't as good as it could be in the months ahead. Looking at some details of the report, some of the highlights: gasoline station sales up 3.8%, non-store retailers, Amazon, online stuff up 7.9%, food services and drinking places up 4.9%, clothing and clothing accessories up 2.6%, general merchandise stores up 3%. Now, there's some seasonalities here. So November approaching the holiday season, Thanksgiving, Christmas. So not too surprising on a seasonal basis to see this number. But nonetheless, it's pretty hot. We have some drops in demand. Furniture and home furniture stores dropped 3.3%. Building material and garden supplies down 0.7%. Sporting goods, musical instruments, bookstores down 2.9%. So some areas take a little bit of a hit. But the Fed will have to consider this. We have some inflationary pressures. We obviously have some demand out there, whether it's debt-driven or not, cause market players to rethink the Fed's rate cut tomorrow. At a pretty high probability, they drop 25 basis points, taking the federal funds rate to 4.25%. This may complicate that decision a bit. I think the Fed should be on hold. Let's see what comes out tomorrow afternoon at 2 p.m. Obviously, they don't cut rates. Expect equities to sell off, dollar to rally, bonds to sell off, commodities to sell off, and the opposite if they do as expected. All right, that's all I have for you right now. Always try to buy American.